When you look at the yield environment that we're in, and you look at how the central banks have affected those yields, where do you see us going over the short term?
Yeah, I mean, so certainly over the short term, say everything was expected last week, as in nothing really at all, passing on the baton. Next week, the market is pretty much fully pricing in another cut from the Fed. When you look at yields globally, we have actually seen a little bit of a backup in terms of yields. When you look back to a month ago, 6 weeks ago, you think that the 10-year German yield was down at minus 70 basis points. We have seen a little bit of a retracement. I think in this environment now, as we get towards the end of the year, we're still in a very easing global environment. But I think after next week, if the Fed does deliver, we expect it to be very much data dependent going forward. As you point out, the data is much more mixed now. It's not terrible in the US, it's still actually pretty decent. Elsewhere around the globe, the data is a little bit more wary. And so I think now we're just being a little bit more cautious going towards the end of the year.
So next week, though, when we do get the Fed, how much confidence do you have, or how much confidence do you think the Fed is going to have and Powell is going to have in giving some real guidance as to the direction of rates, or do you think they're going to just try to hedge their bets here?
I mean, so far the communication that we've seen from Chairman Powell and other members of the FOMC have been pretty clear, I think, that potentially we will get one more sort of insurance cut, but then going forward from there, then really I think it will be much more data dependent, and I think they've already tried to put that message out pretty clearly. I think also when you look at the composition of the Fed and the FOMC, it's much less clear going forward that you'll get consensus for another rate cut in the immediate future.